Welcome to today's market review. It is Thursday, February 24th, 2022. I'm charting gal Lori. I am filling in for charting man Dan, who is off on vacation. Every time he goes on vacation, we have this volatility, and he actually called this volatility. He called today's reaction. So let's look over everything, starting with SPY. So on SPY, we had a beautiful bounce today, just pure spectacle by the bulls. We had 203 million, I shouldn't say shares because it's an ETF, were exchanged. Average is 123 million for the last 10 days. So what is that? 50% more plus than usual. So typically we say bears need to bring volume when they want to bring price down. That's in a bull market. We've been in a bear market. So actually the inverse happened. The bulls had to bring the volume and they brought it. So what we're looking at real quick is a potential inverse head and shoulders. If the bulls can bring it tomorrow, maybe just get a tiny little pullback, and then resistance is 434.16. And then today's support on the hourly is 415.34. So on ES, let me give you those levels on the 4 hour. On the 4 hour, 434.550 is resistance. We're running into the 4 hour 21 EMA. However, we've made plenty of room for a higher low on the 4 hour. And what's different today is we actually have hourly trend changes. We don't have that push off the bottom and then just fall. I mean, we actually got the push off the bottom. We got a healthy consolidation where we saw those tiny bear breaks with very little follow through and then just resumption of the trend. It was just a great day for bulls. And what happened was Dan called it. Let's look at my notes, make sure I get all this straight. Bulls took advantage of bear exhaustion. Bulls brought the volume and it was priced in. Dan has mentioned several times the last few days. I think he even said something like he would risk this year's profit to buy the dip if it was announced that Russia is invading. Russia's invading. So we needed that definitive news. Why did he say that? Because it was priced in. So if you're interested in what Dan was talking about and what I'm mentioning being priced into perfection, we actually have a video. You can just search priced in TheChartGuys YouTube. It's from January 2020, and you'll begin to understand what he means and what I mean with priced in. Every time the market hears news, it becomes desensitized to it. So it'll react real quickly and then I'll price it in. React and then price it in. And each reaction gets duller and duller and duller. Same thing with Fed rate hikes. So every time Bullard talks about a Fed rate hike, maybe more expeditiously and higher numbers, we react real bearishly. Well, each time we react, we're pricing in those rate hikes. So when they actually happen, the inverse reaction that everyone's anticipating happens. And that's what happened today. And it was pretty cool to see it play out the way Dan kind of outlined it. So SPY gap fill, they were boogieing. I don't know why my vocabulary is colorful today. So if we look back, we actually had a gap fill over here at 411.05, and that is from May 19th, 2021. We filled that by about 41 cents and bounced. And look at that candle. It was almost a Maribozu candle. And a Maribozu candle is when you close with no upper wick, where you're just buying as soon as we open and you close at the very high of day. This is not a technical Maribozu, but it's very close. Beautiful, beautiful candle on great volume. So let's look at the notes again. So most time frames have plenty of runway left on RSI. On the hourly, the 4 hour, the daily. And what I mean by that is, let's go look at SPY on the hourly. Look at this room. Despite we just climbed all day on that hourly, RSI is only at 58. On the 4 hour, RSI hasn't even crossed 50, which 50 may be a problem. Look at what's happened before on the 4 hour when we've hit 50 RSI, we've rejected. And that's one of the edges I use in my toolkit is the 50 RSI. If price is coming from above to test that 50 RSI, it can act as support. And when price is coming from below, it can act as resistance. So I'll be watching that tomorrow for sure. But going back to the point is we have runway left. We have plenty of room for this bounce continuation. I know the bears are like, man, do they need to take a break? No, bears didn't take a break for 1, 2, 3, 4 days despite extreme RSIs on lower time frame. So no, the bulls don't need to take a break. They did get almost oversold on the daily and they bounced. All right, QQQ is definitely the strongest bouncer. Let's look at that. QQQ had a beautiful bounce. Yesterday's high, 342.18. We came within $1.14 of that. It would have been nice to engulf that prior candle, meaning that we close over yesterday's high, bullish engulfing, and then look to confirm that tomorrow. That didn't happen. We barely missed it, but we also have that inverse head and shoulder setup. The bulls just have to maybe get a breather in the morning and then resume higher. And you'll notice a lot of orange lines on my charts. Those are my alerts. So I use alerts extensively. I use it for myself and I use it for the room. So if I get an alert, I just go tell the room, hey, this alert came through for SPY gap fill, and I have notes in those alerts. So today it went off at for SPY at 411.05, because that's where the gap fill happened. So I encourage you to use alerts. It helps you to not have to have eyes in the back of your head. Vixx had an interesting development. I was also calling this out in the room, and we went over it this morning in pregame. We actually got a weekly lower high today, and it looks set. Look at this massive pullback on the 4 hour. So on any bounce, we're looking for a lower high. I mean, with the exception of any new news entering the market that is extremely terrible, which God forbid, but something like Taiwan getting invaded by China or something like that, new news, then it could go break that weekly higher high. But for now, the weekly lower high is set, and that was an awesome clue today that bounce was going to get going. IWM, how impressive. So we broke this candle by 17 cents on the weekly. We broke to a lower low by 17 cents and bounced. That's a double bottom. So we have a weekly double bottom, which is strange. This is our highest risk asset class, and it got a weekly double bottom. Pretty impressive. And our other high risk asset class, Bitcoin, look at that. We bounced approximately $1,400 above that weekly higher low, or excuse me, that weekly low of 32,933. Pretty impressive bounce. I'm just making sure everything's working. Okay, we talked about that. Let's look at XLF, and I cover this every morning on the pregame show. If you don't join us, maybe you want to. 8:30 Eastern tomorrow. I go live Monday through Friday trading days. I go live at 8:30, just about 25 minutes, and I rip through about 30 charts. So you could join us and we can have fun together. So XLF is definitely one of the strongest charts out there, and I've been using this chart, so lots of graffiti on it, but I don't want to get rid of my diamond. Oh, not that. So the diamond pattern, I actually made a video for TCG members this weekend. Here is the anatomy of a diamond bearish reversal pattern. Higher high, higher low, higher high, higher low, higher high, lower low, lower high, higher low, and then EQ out on the right side and down. So we haven't confirmed this diamond bearish reversal pattern. However, it is set up very well for this. We'll review it, but just notice XLF is closing red when so many other large sectors are closing green. And XLF has carried us here. XLF has carried the market on its back for how many months? Since October? So it deserves a break. So I'm not saying that it's going to absolutely roll over. It is still holding this weekly double bottom. It broke it by 2 cents. So I'm going to call that a double bottom. But just know that a diamond bearish reversal candle is on the table for XLF. Apple broke to a weekly lower low, but I don't want to lose sight of this monthly chart. This could be a monthly bull flag. And I'm saying it quietly so the bears don't hear me. Kidding. So you see how we have declining bear volume, which today we have 4 days left in the month. If we could keep this bear volume low, it keeps monthly bull flag on the table for Apple. With IWM holding the weekly double bottom, XLF holding the weekly double bottom, Apple with potential monthly bull flags. These are all the glimpses of hope that I see for the bulls to turn things around. And I mean, don't get it twisted. The bulls still have to put their hard hats on and get to work. We have to rebuild the scaffolding of these charts. So I call these EMAs, it's like cement underneath. You see these lines? It's like layers of cement underneath supporting price. And when you don't have those EMAs overhead and they're on top, it's like a ceiling or tree branches. Let's go look at SPY. I can show you. I'm a little long-winded today. So we have these EMAs overhead, and they act as tree branches overhead. You get through one tree branch, got to get through the next one, got to get through the next one. So that's why I say hard hat. They have to go rebuild the structure of this chart. So now we've done the hourly. Now go do the 4 hour. Get the higher low, get the higher high. Okay, now do the daily. Now do the weekly. So they have more work to do. Bears can just coast right here and still be A-okay. All right, if we gap, here's the most important part as far as my action plan for tomorrow. If we gap up tomorrow, I would look to top fish the daily lower highs and our 4 hour lower highs if we don't break them in after hours action. If we gap down tomorrow, I would look to bottom fish hourly and 4 hour higher lows. So I'm looking for the extremes of that scaffolding. So if we're gapping up into it and a resistance, I want to short it with the proper price reaction. Price has to pause at those levels. We can't just short a level to short a level. If we gap down tomorrow, I would look to bottom fish that hourly or 4 hour higher low, again using a level and waiting for price to respond. So Bitcoin and IWM, impressive hold of those weekly higher lows. And gold and oil had a sell the news event this morning. Look at this bearish reversal candle. So they spiked overnight on the parabolic news of Russia for sure entering Ukraine, and then it was sell the news. Oil had an even more extreme reaction. And what's interesting, I love about oil, is around 12:30 my time, that's the pit close, which is 1:30 Chicago Central Time, they have the pit close. And a lot of times, if we're having extreme action into pit close, you can typically take a reverse trade and get that bounce. So that would have worked today. All right, make sure I've got everything else. All right. Again, bulls have to put their hard hats on today. It was a beautiful day if you were prepared for it. If you've been watching Dan's videos, you were ready for today and you welcome that action with both hands open. So I appreciate you joining me and dealing with me. I know I miss Dan too. I did the best job I could. I learned from the best. So y'all have a great day and use stop losses.